It's a big news week between all the housing data and the Fed. There's so much to say. Good morning, everyone. Mortgage-backed securities are down, but improved from where they were when we opened today. So maybe that's a good sign. It's battling a very important level of support, potentially resistance. Let's hope it remains support. We'll talk about that, but this is a very big week. It's Fed week, and the two-day meeting will conclude on Wednesday about 2 p.m. And we got from the Wall Street Journal insider there, Nick Timros, the fact that the Fed has leaked that this is a 75 basis point hike. That's to be expected, but a lot of the comments as to what will we do on September 21st, how are they viewing the latest move up in the CPI numbers? And then, of course, we've got more news this week. Then we've got the PCE coming out this week, and it's expected to rise from 6.3 to 6.7 on inflation. But the market's already been braced for that because the CPI number was so hot. But then, Dan, I think that GDP number is going to be really meaningful.
This is going to be on Thursday, and this is the first look, the advanced reading on Q2 GDP, and they're expecting negative 1.6% after Q1 was also negative 1.6%. So this would be two consecutive quarters of negative GDP. Remember, the referee here, the MBER, they do look for depth, diffusion, and duration, so they may not immediately call a recession, but is important to note that there's never been two consecutive quarters of negative GDP where they haven't eventually called a recession. So definitely on the horizon. But I also saw an interesting story from Adam Data Solutions, and this is really a good example of how you can mislead people with statistics. So they were reporting on lender repossessions, and they reported that in the first half of 2022, there was 21,000 repossessions from lenders, and this is up 113% from last year. Well, let me give you a little example. Let's just say hypothetically there was one, a very, very low number last year, and now this year you got two. Well, you could go ahead and say that's 100% increase, but it's coming from an extremely low base. And this is exactly the case here. There was almost no repossessions last year. But if you go back to 2019, we are 70% below that level of repossessions, which is pre-COVID and in a more normal level. And if you go back to 2017, we're 88% beneath that.
Big numbers to see come underneath those levels. It's amazing, as you said, how statistics and when you look at just raw percentages, it could play a role. But Dan, I also wanted to piggyback on something that you said about calling for a recession. Isn't it interesting? Janet Yellen, who has about as bad a track record as possible, Janet Yellen says, no recession, just a slowdown. Just amazing how people just don't see it. But Diana, there's a lot of news and things to say later on this week too.
Yeah, like there wasn't enough. We get a lot of housing news this week. We get Case-Shiller and FHFA appreciation readings for May, as well as new home sales for June. And this measures signed contracts on new homes, as well as the important counterpart, pending home sales, also for June. And this is very important. It makes up 90% of the market and measures signed contracts on existing homes. And we are expecting a little bit of a slowdown here. But overall, since the two latter reports, pending and new home sales, are both for June, it gives us a more real-time kind of finger on the pulse read. So it's going to give us a better idea of how sales are looking.
All right, quick look at the charts. And we take a peek here and we see that mortgage-backed securities, they're down 17. As I said, that's not great, but it's a lot better. You can see the green candle here. We had faltered just like we did on Friday after a nice start to the day, but stopped dead here on these dual layers of support. The 50-day moving average now acting as a floor where before it was a ceiling. And in addition to that, you do have a Fibonacci level. Now, this is going to be a really important and pivotal day because a downward move here, breaking underneath these floors, also would kind of give us the beginnings of a bearish evening star pattern. And that would suggest a little bit of a further decline for sure to the 25-day. So we want to watch this really carefully. But if we can battle and stay above this, as you can see, there's some ground to the upside. Look, we'd have to clear these highs here. So this will probably be our first barriers right around that area there. But if we were able to clear this level, then the next stop would be heading towards the 100-day moving average. So we want to give it a chance here, but we will be very closely watching it and on guard. Hope you guys are off to a great start today. We'll begin carefully floating.